So you want to know more about NextEra Energy,
That's right.
and is it right for your portfolio?
Big question.
Well, we've gathered a whole bunch of info, articles, even some stuff about their history.
Yeah.
Let's see what we can uncover.
Sounds good.
To kick things off, NextEra has a really interesting history. They've been around for almost a century, focused on innovation pretty much from the start.
Yeah, back in 1927, almost 100 years ago, they set up this demonstration farm to, show how you could use land that people thought was useless.
Wow, that's forward thinking.
It is. And that kind of thinking continued. In the 70s, they were big on energy efficiency campaigns. Then, when the oil crisis hit in the late 70s, they started looking into alternative fuels.
Makes sense.
And fast forward to the 2010s, they got recognized by the Southeastern Electric Exchange for building this huge solar power plant, like the biggest in the U.S. at the time.
So clearly they've got that innovative spirit. But what about their financials? How are they performing these days?
Well, it's kind of a mixed bag when you look at the analysts. TipRanks gives them a moderate buy rating,
Okay.
and their average 12-month price target is $88.92.
Which means?
There's a potential upside of 22.16%.
Yeah.
But then you have Zacks, and they give NextEra a hold rating.
So different perspectives. Why is that?
Zacks is worried about overvaluation.
Okay.
They say that, yeah, NextEra has a good growth score, but it might not be the best pick for someone who's looking for quick momentum plays.
Interesting. And Zach's also mentioned some valuation metrics.
Right. They pointed to three main ratios.
Wow.
The price-earnings ratio, the price-sales ratio, and the debt-equity ratio.
A lot of ratios. Let's break those down a bit.
Sure. So the price-earnings, or PE ratio, is basically comparing the company's stock price to its earnings per share.
Right.
So if a company has a high PE, it could mean investors are expecting big growth in the future, or, it could be a sign that the stock is overpriced. Then there's the price-sales ratio.
Okay.
That one compares the company's market cap to its revenue. It basically tells you how much you're paying for each dollar of sales the company makes.
So a high PS ratio could also be a red flag for overvaluation.
Exactly. And finally, you've got the debt-equity ratio.
Right.
This one's all about how much debt the company's using to finance its assets compared to how much it's using equity.
Got it.
So a high debt-equity ratio might make some investors nervous. It could mean the company's taking on more risk.
Makes sense. So we've got those ratios to think about, but what about NextEra's market share? Where do they stand in the overall energy market?
Well, they've got a pretty big presence, especially in Florida.
Florida, huh?
Yeah. And that's kind of a double-edged sword. It gives them stability and a potential pricing power, but it also means they're more exposed to risks that are specific to that region.
Makes sense. Now let's talk about innovation. I mean, NextEra is known for pushing boundaries in renewable energy, right?
Yeah, big time. Their Manatee Energy Storage Center, it's the world's largest solar-powered battery storage facility. It can power tons of homes for a serious amount of time. Then there's their FPLR one. It's a fixed-wing drone they use to inspect infrastructure.
So they're really leaning into tech to make things more efficient and reliable.
Absolutely. Plus, they've set this ambitious goal to reach zero carbon emissions by 2045.
It sounds like they're aiming to be at the forefront of the sustainable energy future.
They definitely are.
Okay, let's move on to acquisitions. NextEra's been on a bit of a buying spree lately, right?
They have 6 acquisitions in recent years, averaging around $3.2 billion per acquisition.
That's a lot of activity. What kind of companies are they targeting?
Mainly asset management and solar energy companies.
Any notable examples?
Yeah, they picked up CenterPoint Energy, which makes equipment for electric transmission, and Jazz Wealth Managers, an asset management firm.
So it sounds like they're trying to control more parts of the energy value chain,
Yeah.
sort of a vertical integration strategy.
That's right. It could make them more efficient, maybe boost profits, but...
What is it?
Well, we got to see if they can actually integrate these companies smoothly and achieve the synergy they're hoping for. It could backfire, lead to more debt and operational headaches.
Right, that makes sense. Okay, now let's talk shareholder value. What are they doing for investors?
Well, their dividend policy is pretty impressive.
Okay, tell me more.
They've been consistently increasing dividends for 28 years straight.
28 years, that's a solid track record.
It is. It makes them really attractive for income-seeking investors. Their current annual dividend is $2.06 per share.
Not bad.
And the yield is 2.85%. Plus, they pay out quarterly, so investors get a nice, steady stream of income.
That's appealing for a lot of people. What about share buybacks? Are they doing any of that?
Yeah, but their share buyback yield is actually negative 2.07%.
Negative. What does that mean exactly?
It means they've been issuing more shares than they've been buying back.
So that can dilute the ownership of existing shareholders.
Exactly. So, buybacks can be a good sign. They can boost earnings per share and show that management is confident. But this is something to watch.
Definitely. Okay, last but not least, let's touch on ESG factors.
Yeah.
How does NextEra stack up in terms of environmental and social responsibility?
Well, their focus on renewables and sustainability is a big plus, environmentally speaking. They're not just jumping on a trend, they're really trying to shape the future of energy.
And that resonates with a lot of investors these days.
For sure. Investors are paying more and more attention to these issues.
So we've covered a lot here. NextEra's history, their financials, innovation, acquisitions, dividends, buybacks, and ESG factors.
A lot to digest.
It is. Now let's try to bring it all together and really dig into the potential pros and cons of owning this stock. Could it be a good fit for your portfolio?
Let's do it.
Okay, so on the plus side, NextEra is a leader in the renewable energy sector, which, as we've said, is growing fast. They've got a strong financial track record, they've consistently increased their dividend, and they're clearly forward-thinking when it comes to innovation.
All good points.
But, of course, there are some things to consider. Some investors might be hesitant about their valuation,
Yeah.
and that concentration in Florida, well, that comes with certain risks. Plus, all those acquisitions, while potentially beneficial, could also create problems if they're not managed carefully.
Definitely things to think about.
So it's a complex picture, and ultimately, whether or not NextEra is right for your portfolio really depends on your personal investment goals, your risk tolerance, and how long you plan to hold the stock.
Absolutely. It's not a one-size-fits-all situation.
Right. Before anyone makes any decisions, it's crucial to do your own research, maybe talk to a financial advisor, and think about your overall financial situation.
Good advice.
Now, let's step back in time for a moment. We've touched on their early demonstration farm, but there's more to their history that highlights their innovative spirit.
Oh, yeah. In the 1920s, Florida Power and Light, which is what they were called back then, they were all about promoting the use of electricity.
Interesting.
They had salespeople going door to door, encouraging people to buy electric appliances.
Door-to-door salespeople for refrigerators and things.
Yep. And they even set up showrooms in their offices to display all the new gadgets, like every employee became a salesperson.
Wow, that's a pretty hands-on approach.
Yeah.
I guess it worked, though, right? It helped them grow their business.
It did. Then, during the oil crisis in the late 1970s, Florida Power and Light showed their innovative side again.
How so?
They didn't just switch to different fuels, they implemented this quality improvement program, which was all about problem solving and teamwork.
Interesting.
And it was so successful that it became a model for companies all over the world in places like Japan, Brazil, and Sweden.
Really?
Yeah. It really shows how dedicated they are to continuous improvement and, adapting to change.
These historical examples are really fascinating. They show that NextEra has always been willing to embrace new ideas, and that's still true today with their focus on renewables and grid modernization.
Definitely.
So to circle back to the big question, is NextEra Energy a good fit for your portfolio?
Right.
Well, if you're okay with a potentially higher valuation because the company's in a growing sector and you really believe in the future of renewable energy, then NEE could be a good option for you.
Yeah, I'd agree with that.
But if you're looking for a bargain stock or you're more risk-averse, then you might want to look elsewhere.
That's true. You also have to think about those risks related to their geographic concentration and their recent acquisitions.
Exactly. And your investment time frame is important too. If you're in it for the long haul, you might be willing to ride out any short-term ups and downs in the stock price because you believe in the company's long-term potential.
Makes sense.
But if you're hoping for quick returns, NEE might not be the best choice.
Right. And for income-oriented investors, their strong dividend history is definitely a plus.
It is. But it's important to also consider their share buyback activity and how that might impact shareholder value.
That's an important point.
At the end of the day, the decision of whether or not to invest in NextEra Energy is a personal one. There's no right or wrong answer for everyone.
Exactly.
It's all about finding the right investments for your individual circumstances and your financial goals. We hope this deep dive has given you a good understanding of NextEra Energy.
I think so.
We've looked at their history, their financial performance, their innovation, their acquisitions, their dividend policy, their share buyback activity, and their ESG factors.
It's a lot.
It is a lot to take in. But remember, investing is a journey. not a destination. It's about making informed decisions based on thorough research and understanding your own risk tolerance.
And don't be afraid to seek professional guidance if you need it.
Absolutely. Now, before we wrap up, let's leave you with something to think about. We've seen how NextEra has constantly adapted and innovated over the years.
They have.
They embraced new technologies, explored alternative fuels, and really pushed for the adoption of renewable energy.
Yep.
But the energy landscape is constantly changing. New technologies are emerging, regulations are shifting, and consumer preferences are evolving.
That's the reality.
So the question is, how might these future developments impact NextEra's business?
That's a good question.
Will they continue to be a leader in the energy transition, or will they face new challenges?
It's something to consider when evaluating their long-term potential.
Right. And with all their acquisitions, can they successfully integrate these companies and achieve the synergy they're aiming for?
Or will they run into problems and end up with more debt than they bargained for?
These are all important questions to ask yourself as you assess the risks and opportunities of investing in NextEra Energy.
Definitely.
This kind of careful analysis is what we encourage you to do with any stock that catches your eye.
Investing requires thorough research, and hopefully our discussion has given you some helpful insights.
Absolutely. And if you're interested in exploring more investment insights and deep dives like this one, make sure to subscribe to our YouTube channel.
We're always breaking down the latest market trends, analyzing promising stocks, and sharing our thoughts on the ever-changing world of finance.
And be sure to let us know in the comments what stocks you'd like us to discuss next.
We love hearing your suggestions. We're always on the lookout for new companies to analyze.
Until next time, happy investing.
Happy investing.
So, is NextEra Energy a good fit for your portfolio? That's the million-dollar question, isn't it?
It really is. There's a lot to consider.
Let's recap those pros and cons we talked about.
Okay, sounds good.
Starting with the positives. NextEra is a leader in renewable energy, and that sector is just booming.
Definitely.
They have a strong financial history, they consistently increase their dividend, and they're super innovative.
All good signs for the future.
But of course, it's not all sunshine and roses.
Right.
Some folks might be a little put off by their valuation.
Yeah, it's something to think about.
And then there's that geographic concentration in Florida.
Which, as we said, comes with its own set of risks.
Exactly. And we can't forget about all those acquisitions. They could be great, but they could also cause some headaches.
Integration is key. And too much debt is never a good thing.
Absolutely. So you really got to weigh all those factors carefully. If you're comfortable with the slightly higher valuation because the company's in a growth industry, and you really believe in renewable energy's potential, then NextEra might be a good addition to your portfolio.
That's a fair assessment.
But if you're looking for a bargain stock, or you're just not comfortable with a lot of risk, there might be better options out there.
There are definitely other fish in the sea, so to speak.
And let's not forget about their dividend policy. That consistent growth and decent yield, that's really appealing for income investors.
For sure. Anyone looking for a steady stream of income would find that attractive.
But, we can't ignore those share buybacks either. That negative yield, that means they've been issuing more shares than they've been buying back.
Which can dilute the value for existing shareholders.
Right. So if your main goal is capital appreciation, that's something to keep in mind.
Definitely.
So bottom line, should you invest in NextEra? There's no easy answer. It really comes down to your personal investment goals, how much risk you're willing to take, and how long you plan to hold the stock.
I couldn't have said it better myself.
Investing is all about finding the right fit for you. It's like putting together a puzzle.
I like that analogy.
Each piece has to fit just right.
And sometimes you got to try a few pieces before you find the perfect one.
Exactly. So we always encourage everyone to do their own research, maybe talk to a financial advisor, and really think about their overall financial picture before making any decisions.
Couldn't agree more.
NextEra Energy. It's a fascinating company, but there's a lot to think about, right?
Yeah, a lot of moving parts.
They're all in on renewable energy, which is great, but then there's that valuation, and their focus on Florida, those acquisitions.
Definitely some pluses and minuses to weigh.
That's what makes investing so interesting, isn't it? You have to look at everything, the good and the bad, and figure out if it all adds up for you.
It's a balancing act for sure. You got to assess the risks and the potential rewards and make a call.
And that's why we always encourage our listeners to do their own homework, dig a little deeper into what we've talked about and come to their own conclusions.
Absolutely. This deep dive, it's just a starting point.
It's like, we're giving you the ingredients, but you got to cook the meal yourself.
Yeah, you got to figure out what you like and what works for your taste.
Exactly. Investing's not a one-size-fits-all kind of thing. It's a very personal journey.
It is. And it all starts with careful analysis, making informed choices.
And hopefully, our discussion has given you the info and the tools you need to do just that.
That's what we aim for, to empower investors with knowledge.
If you're looking for more deep dives like this, more insights into the world of investing,
Be sure to subscribe to our YouTube channel,
we're always putting out new videos, breaking down market trends, analyzing companies.
sharing strategies, all that good stuff.
And don't forget to hit that comment section and tell us what stocks you'd like us to explore next.
Yeah, we're always looking for new ideas, new companies to deep dive into. Your input is valuable.
So, until next time, happy investing, everyone!
Happy investing!